Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. It's Monday. We got the market back open. What's going on? Well, we're having a little bit of a down day. The Dow's down about 100. The Nasdaq's down about 100. Little bit of a down day. Now, so far, the Nasdaq has had like the best start to a year that it's had in the last 20 years. The Nasdaq's already up about 20% this year, but the Dow, not so much, only up about 1%. Well, right now, it looks like we're pricing in a soft landing. Okay, so the Fed's going to navigate this soft landing. There's not going to be a recession. As a matter of fact, Janet Yellen just came out and said we can't have a recession when unemployment numbers are so low. Now, I'm a little skeptical on those unemployment numbers. I don't know about you, but they say it went from 3.6% down to 3.4%. Now, in my area, we're laying off a lot of people. I work where the technology area is, and there's a lot of layoffs, right? And according to Janet Yellen, with her math, if we keep laying people off, maybe we can get this unemployment number down under 2%. I don't know really how that all works, but I think this market is overbought right now, especially the Nasdaq. Nasdaq 20% up already. A lot of people think this is a new bull market and we'll just keep going. I don't see it that way. Now, maybe we just get a little bit of a pullback and then head higher, but I think the market's going to come in. I think we're going to get the market to turn around and come back in. Even, right now we're overbought. Even if you don't think it's a new bull, if you think it's a bull market, you're still going to want to be cautious here because we're way overbought. Yes, we can come down and then go up, but I think we're coming down, and I think we're going back and taking out the December lows. I think we're going back and retest those October lows, but that's just my take. Let's move over to the real estate market. Real estate market, it just always cracks me up. I don't know why I find it so funny. Well, I guess because the Redfin CEO came out and said, hey, guess what? The housing market has turned around. We've hit bottom and we turned around. We're going back up. The January numbers all came in fabulous. They were all up. Look at the increased touring activity. There were more purchase applications. There were more offers made. There were pending home sales are up for January. This is incredible. This is incredible, right? Okay, everything's fixed in the housing market, apparently, if you want to listen to the Redfin CEO. But, he's got some skin in the game. He depends on housing for his livelihood. Let's take a look at some things. Well, first of all, let's start with the existing home sales. Okay, maybe they were up in January. I haven't really heard that, but he says they were. Well, look, we've declined 11 straight months. 11 straight months that we've declined, right? All right, so maybe they were up. Maybe nothing goes straight down. Stock market doesn't go straight down. Housing doesn't go straight down. So everybody's rejoicing over this little drop in interest rates. 7% down to 6%. Hurry up. Get in. Well, you see, I just don't see it this way. Now, I'm a real estate broker, and full disclosure, I'm supposed to say, hey, it's a great time to buy. Get out there and buy. But look we got the biggest housing bubble ever in the history of the world. This is the largest housing bubble. Now, just because rates came down from 7% to 6%, maybe that's pulling some people in. Maybe that's found some suckers, for lack of a better word, to jump in the market and buy the house. But look this is a terrible time to buy. I'll tell you why. All right, it's a terrible time to buy because rates in the last year, they've gone from 3% up to 6%. They were up to 7%. Now everybody's happy because they're down to 6%. But that's a doubling of rates in the last year. Now prices just since the pandemic, 30, 40, 50% higher. So you're paying this much higher with the doubling of interest rates. I mean, there's going to be some buyer remorse coming out. Look at a lot of people that bought in the last 2 years. They're already underwater. We've come down about 12% so far. Now, a lot of people, they only put 5% down. So if they bought, they're already underwater. If you bought in the last 2 years, you might be having some remorse. But who are these people that are going in and buying now? Do you think they're going to have any buyer's remorse? I think they're going to have a lot of buyer's remorse, but maybe it's just me. But I think it's really a terrible time to buy. You see, now your wages, did your wages go up 40 or 50% since the pandemic? No, I don't think they did. Most people's didn't. Mine didn't go up that much. Hey, look, okay. Here's the thing. Here's the thing. Right now, people are, well, they're having a lot of stress to own a home. There's a lot of stress when you buy to own the home. You see, normally people are paying about 30% of their household income to make the purchase. The mortgage payments are about 30% of the household income. But right now, people are jumping in at these numbers, and it's about 50%. 50% of the household income is going to pay the mortgage. I mean, that is not sustainable. I'm telling you right now, that is not sustainable. This market will revert back to the mean. Look, we shot up like this, right? We've taken off like a rocket ship. Who knew that the pandemic would create this buying spree, right? I didn't see that coming. I'll be the first to admit it. But it happened, and we jumped up 30, 40, 50%. Some areas 80 or 90%. Boise just went off the charts. Doubled, tripled. But look, this isn't sustainable because the income in Boise hasn't risen that much. See, this will revert back to what the income can afford. It will revert back to the mean. Now, to get back to the mean, you're going to have to come down 40 or 50% just to get back to the mean. Now, a lot of people are going, Mike, that could never happen. Well, of course it can. It just happened in the reverse. We went up that much. Believe me, we can come down that much. Now, I think we're going to go all the way back to 2012 prices, and people get really upset with that. They're going, oh, that's impossible. That's absurd. You don't know what you're talking about. Now, I may not know what I'm talking about, but here's what I do know. I do know that prices have already come down 10, 12%, right? Okay, in my area, we're down closer to 20%. But things right now, they're priced for perfection. These are the good times. We're in just the second inning right now. I'm telling you, there's a lot to play out. Nothing bad's happened yet. Things are going smoothly. Look, there's no forced selling. There's no foreclosures. Mike, there's not going to be any foreclosures this time. Everybody's got so much equity. Everybody's got equity, right? Well, a lot of people do have equity. Equity is at a record high. Let's call it $25 trillion worth of equity, right? Equity is the amount above what you owe versus what the value of the house is priced at. Now, okay, let's say everybody wanted to take their equity out. Let's say they all went in to get their equity out. Could not happen. Maybe 1%, 2% at the most could get their equity out. You see, real estate is sold at the margin. Now, Billy Bob, he was smart. He went in, he got all his equity out, and he hit that high number, right? But look, at equity, you can't get all the equity out. The thing that's keeping the equity up is that people aren't selling yet because they don't have to sell. They have a choice right now. They can sell, get their equity like Billy Bob did, or they can hold on and not sell and just hopefully that equity keeps going up. But that equity is not going to keep going up. You see, now even though Janet Yellen will tell you it's impossible to have a recession, I promise you a recession's coming. The yield curve's inverted. It's 100% accurate. It means a recession's coming. Now the thing is, can they delay the recession? Yes, they can delay it. They could delay it all the way to 2024. Now I think we're going to hit the recession in 2023. I really believe that. But could it delay to 2024? Could. Takes a while to play out. But look, I know a lot of people, that they've been waiting all through this pandemic. They didn't buy a house, but they really want to get in there and buy a house. So they're jumping in right now. I see clients like that. And I think that's just a big mistake. But, they just say they can't wait any longer. I'm going to jump in. Okay, well, maybe houses go a little bit lower, they think, but not a lot lower. Now, I think they could go a lot lower. You see, things happen in the financial world. I mean, everything's interconnected. You got these derivatives in play. You got a lot of things in play. Now, I could give you a scenario that is real scary, and it would be down a lot more than 50% if the scenario I gave you played out, but I don't want to scare anyone today. It's a Monday. But here's how things could be intertwined. All right, so you may have heard, if you're in the financial world, the Adani Group, right? Okay, Mr. Adani, he was the second wealthiest man in the world. He was right behind Elon, right? Anyways, his net worth was about $150 $50 billion, right? Well, he lost $100 billion of it because the Adani Group, now they're accused of financial fraud, right? They were cooking the books in their accounting systems, and the company's just free falling right now. It's a privately traded company called the Adani Group, and now it's in free fall, right? Okay, well, you see, some people, it's all intertwined. Who's in that Adani Group? Well, BlackRock. BlackRock's in that Adani Group. Does BlackRock own some real estate? Yes, they do. What if they got hurt really bad? We don't know the numbers that are coming out from the fallout of the Adani Group. Now, yeah, Mr. Adani lost $100 billion. Wouldn't it be nice to be rich enough to lose $100 billion? Now, that's not the record. Now, Elon's went down $200 billion, but he's way back up now. I mean, the stock of Tesla was down at 100. Now it's up to 200. It can happen in a week, but it can happen in a week the other way. For Mr. Adani, it's happening in about a couple months' time, just free falling, right? So everything's going along smoothly. Well, what if BlackRock got intertwined in that? They needed to raise some cash to make up for their losses in the Adani Group. Well, what would they do? Well, they'd have to start selling their real estate holdings. What would that do? It put downward pressure on real estate. Now, I'm not saying they're in trouble. I'm not saying they have to sell their real estate holdings. I'm not saying anything of the sort. What I'm saying is that these are the good times, and these are not always going to stay this way. Everything's great until it's not. And even in these good times, nothing bad's really happened. Yeah, interest rates went up a little bit, mortgage rates went up a little bit, but the housing market's already down 12%. What's going to happen when something bad happens? What's going to happen when a recession comes? What's going to happen when millions of people lose their jobs? Well, that's going to be something bad, right? Okay, it's going to be what I call forced selling. They're going to be forced to sell their house because that's their main asset. That's where their money's sitting. When they can't afford to live, they have to sell something, and what they have to sell is their house, and they put that on the market. Mike, they could never do that. They got all that equity, and that's true. Most of them will just put it on the market for sale, but some of them will wait too long. Some of them are already underwater, and those will be the forced sellers. Foreclosures are going to, they're going to spike like this. Now, I know in our country, we got away from the Constitution. We say we can't foreclose on people anymore. I mean, that's like unconstitutional because it's contract law I'm talking about. There's contracts that are made that were broken during the pandemic, and everybody thinks that they don't have to pay anyone anymore. You don't have to pay for your car loans. You can go on forbearance. You don't have to pay for your houses. You can go on mortgage forbearance. You don't have to pay your rent. You can go on a rent moratorium. Everybody's got this mindset now. It doesn't work that way. There's going to be some forced selling. There's going to be some hard times coming. There's a recession coming. I don't care what Janet Yellen says. All these layoffs, it's not going to, she thinks the more people get laid off, the lower the unemployment number goes. I was never taught that. Well, I see in layoffs in my area, 10,000 per company. A lot of companies, 20, 30,000 people right now just getting laid off. And this is just the start. This is just the tip of the iceberg. These are the good times. I'm telling you, this is not going to stay this way. Now, you can take my word for it. You can go talk to your local realtor, and he'll tell you it's going to be a great time to buy. He'll tell you it's a great time right now because those rates have come down and the price of a home's lower. The rates went from 7% down to 6%. You better run out, jump right into the market before it's too late. Yeah, I mean, they're trying to create this FOMO again. I love it. It's funny, Here's an interesting thing. A lot of real estate agents, man, they're just dropping out of the business. I know a couple of them. They're just locking up shop. They can't afford their rent. They're closing the door. They're going under already. And we're not even in the bad times yet. Oh, it's going to get ugly. It's going to get ugly. I don't mean to depress anyone on a Monday, but okay, it's Monday. Everybody get out there. Have a great Monday. I'm done. Bye-bye now.